Central banks and those who run them have operated with unchecked power and no oversight for far too long. Few other entities have had the ability to destroy the economy, erode the dollar's value, and now, with CBDCs, threaten our freedoms and our privacy, all without being held accountable.
The central bank will have absolute control.
There is no other agency of government which can overrule actions that we take.
Central bank leaders continually claim that their #1 goal is stability. Yet they fail us at every turn. It begs the question, are they truly interested in stability, or are they more interested in a consolidation of power through designed crisis? And before you dismiss this as far-fetched or alarmist, I challenge you, ask yourself, what happens during times of financial crisis, especially crisis that happens as a result of central bank policies? Are there calls for additional oversight and a reduction of power? Or does the opposite happen? History shows us that these crises have been used and are still being used as an argument for increased independence, more power, more control, all of which directly impact your financial future. And before we expose what's coming as a result of the next crisis, it's important to first understand how central banks have grown in power so that we can see their playbook today. The Federal Reserve was created in 1913 in response to the banking crisis, with the goal of creating a stable money supply through the issuance of Federal Reserve notes. Now, what you might not know is that the Federal Reserve Act did not mention monetary policy the way that we're familiar with it today. And this is because the new currency that was created, these Federal Reserve notes, were tied to reserves of gold. This limited how much currency the Federal Reserve, how many loans the Federal Reserve could create, which curbed any kind of inflation. However, as you can guess, that stability didn't last long before the temptation to increase the money supply was too strong, leading to inflation, stagflation, the great financial crisis, and of course, where we are today. But the fascinating part is that each time the Federal Reserve created a crisis, they were the ones who fixed it, which led to praise and an increase of powers, despite the fact that they were the reason we were there in the first place, such as the 1970s, keeping yields low and increasing the money supply was what resulted in extreme inflation. But when they fixed it, this is what led to the dual mandate and an expansion of powers that we know them as today. Now, quantitative easing, or the ability to create more cash out of thin air, can happen in several ways. When we talk about central banks, most of the time, it's in reference to them purchasing large quantities of financial assets, such as government bonds, which effectively creates more dollars in the economy. This is that metaphorical money printing machine that was working overtime during 2008. And although many were concerned during the great financial crisis about this injection of cash into the system, because you know as well as I do, you can't paper over a crisis and expect there to be no consequences, there were many people who touted the Federal Reserve's response as a tremendous success. And it was because of this perceived success that money printing was viewed almost like a cure-all. So when 2020 hit, it wasn't that big of a deal to inject more cash than had ever been done before into the economy. But this time around in 2020, the Federal Reserve did not act alone. They hired a private sector firm to help buy these assets, none other than BlackRock. But BlackRock and the Federal Reserve did not act alone. In fact, this was a directive that was coming from even higher up. The Bank for International Settlements, the BIS, often referred to as the central bank for central bankers, was also originally created with limited power, originally just to help with reparations from World War I, but has grown in scope to now oversee the entire global monetary system, providing guidance and framework to all central banks, assisting them in times of crisis and making sure that they have the best monetary strategies. When we talk about the injection of funds into the system in 2020, it's easy to focus just on the United States. But when you zoom out, it actually was a coordinated effort by central banks all over the world to create all of this cash flow. And this time, per the BIS's directive, they did something a little bit different. They circumvented the usual process of putting cash flow into banks in the intention of it trickling into businesses and stimulating growth, and instead went direct to consumer, which created an abundance of extra money supply, 20% growth annually, the most that has ever been seen before. This is because anytime there's new cash flow and it's tied just to consumer spending or the financialization of assets, you're going to have a situation where there's no real growth attached to the additional cash flow that's coming in, which always results in increased inflation. Now, this is where it gets interesting. Many have speculated for a long time that the only way out of the ever-growing debt burden, not just in the United States, but again globally, for these countries who have become addicted to easy money is through inflation. What happens when you hit the end of the road? If you think about it, the easiest thing to do is just point the finger elsewhere. And this can be achieved if the value of your debt is silently being eroded. Inflation erodes the real value of debt, which becomes particularly important when we're talking about $35 trillion worth of debt. But unfortunately, you cannot inflate your way out of debt without consequences. If you look at France, after World War II, they were experiencing inflation of almost 50%. Well, after a while, their debt as a country almost melted away, but not without eroding the savings of their citizens. But really, when you think about it, it's almost genius, because if you are able to get rid of your debt while simultaneously eroding the savings of the citizens, well, now you've created a crisis where you're wiping the slate clean. All of the monopoly pieces get pushed off the board and you are able to do whatever you want. Around the same time that the money supply was exploding, which central banks knew would result in extreme inflation, the concept of central bank digital currencies, or CBDCs, started to pop up all over the world stage. Now, CBDCs are programmable digital currencies that would be operated by the central banks. In the United States, by the Federal Reserve. Now, proponents of CBDCs say that they will facilitate trade, reduce costs, and improve efficiencies. But critics say that CBDCs will be the end of our freedoms as we know it. This is because they are fully programmable and therefore could be manipulated as the central banks see fit. Maybe you attend a protest that they don't agree with. Well, suddenly, poof, your funds are gone. Or maybe you're no longer allowed to buy a plane ticket or gas because they want to keep you exactly where you are. The same way that the trucker convoy accounts were frozen in 2022 by the Canadian government could be happening to us every single day.
The federal government is saying banks have already started to freeze the accounts of people involved in the protests, and they are warning there will be dire financial consequences to come.
Except this time, it's instant and there's no oversight and no regulation. The BIS has shared their vision for what this would look like. One unified ledger, one global ledger, which would mean no privacy. You think it's bad enough right now that your social media data is being shared? Just wait until every single transaction you make is monitored, logged, and recorded. And for those out there who say, well, people in the US don't want a CBDC, it's not going to happen. What if the Federal Reserve made it happen? The Federal Reserve wields so much more power and control than most people are even aware. If you think about it, they already favor big banks and a consolidation of power, viewing small and regional banks as disposable. This would be a further consolidation of power where the entire money supply would be under their control.
Certainly there will be some banks that have to be closed or merged out of existence.
Think about the value of the dollar. What if they continued to erode the value through inflation until there was a point where people were so desperate that they jumped ship and suddenly needed to use a CBDC as their only lifeline? This is the future that we're heading towards. This is the future that they want. And when people ask me, well, what can we do to stop this? I wish I had a better answer. I don't know if this will be inevitable or not, so all I can urge everyone to do is to make sure that you take matters in your own hands and that you're protected. outside of using cash, outside of making sure that everyone's aware of what's going on and helping spread the word. So if you have someone who's not aware of this, make sure you share this video because education is so key. The other thing that you can do is make sure that your wealth is protected outside of the system. Because if inflation continues and if they are trying to find ways to erode the dollar so that ultimately we are all forced to using a CBDC, well, the best thing you can do is have your wealth stored in a non-dollar denominated asset, such as physical gold and silver. Something that has held its value since the dawn of time, something that you know will protect your wealth moving forward. Even if they wanted to, and I'm sure they do, they cannot erode its value. That is why I personally am able to sleep easier at night because I know that I'm protected outside of the system. Because once this rollout happens, and again, if you ask me, it's not a matter of if, but when. Once this rollout happens, it's going to be a lot more difficult to find ways to protect yourself than it is today. So that being said, if you are concerned about any of this, talk to one of our analysts. Click the Calendly link below or give us a call. Because our analysts have been studying this for years in a way that most mainstream financial planners will not be able to help you. If you have a financial planner right now, I urge you, go ask them about CBDCs. And I doubt that they will be able to address your concerns in the same way that our team can. So, if you are concerned about any of this, talk to a member of our team. Make sure that you have a strategy in place that works for you to protect you against what's coming next. And as always, I so appreciate you being here with me. Thank you so much. I'm Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.